And let's get started to the top story this evening. And this is a special analysis that we are bringing for you. Market regulator SEBI is looking into the confusion over trades placed for foreign institutional investors last Friday. So let's bring in our team to get you the number crunching, what transpired and what lies ahead. Prashant Nair and Santosh Nair are joining in the studios. So Prashant, coming to you first, take us through a recap of what happened. And then we can bring Santosh in to take us through what can lie ahead.
Oh, absolutely. I think Santosh and his team at Money Control put the analysis together early in the I mean, they were the first to actually catch on to this in the morning today, and we're going to bring Santosh in for that. But I just want to, for our viewers, very quickly take you through what this issue is all about. I mean, if you've been in the market, there's no way that you could have gotten away from what has happened to HDFC Bank, what the stock did last Friday. So essentially, the FII shareholding limit in HDFC Bank is 74%, which means that FIIs, foreign investors, cannot exceed 74% in HDFC Bank. Now, the regulator gives that RBI gives a buffer of about 2%, which means that when the foreign shareholding goes above 72%, with explicit permission from the RBI, FIIs can buy more stock. But the ultimate limit is about 74% or so. What happened is last Thursday, the foreign shareholding in HDFC Bank, fell below, or even before last Thursday, fell below the 72% mark. There is 72% and then there is a 2% buffer. Final shareholding limit is 74%. Friday morning, essentially, starting Friday morning, RBI said that HDFC Bank shares will be available for FIIs to purchase in the normal market segment. And what that led to was frenzied buying. I mean, demand for HDFC Bank shares went through the roof. The stock at one point was up 8-9%. The demand was so large that by afternoon, the limit of 74% was hit, which means that exchanges, both the BSE and the NSE, told their clients on their respective terminals that the limit is hit. This was about 138, 139, respectively, when this notification was put out. The big question, the reason why we are saying there is a bit of an issue here, is that there were still trades which were put in, buy orders which were put in by foreign investors even after that notification was put out. That is, in mid-afternoon, exchanges said no more, cap is hit. HDFC Bank shares cannot be bought by FIIs in the normal market segment, but there were orders which still came through after that notification. What really happens to those trades, really, or orders, really? They're not trades yet because they've not been settled, but what happens to those orders? That is the question that we are really asking. RBI essentially has put out a circular telling custodians, remember, institutions deal with custodians, they don't settle contracts themselves. RBI has essentially told custodians, do not confirm the orders, FII purchase orders which came in after the exchange notifications of restriction came into place mid-afternoon. Which implies that the entire issue will be now at the doorstep of the brokers. So FIs would have told brokers to buy, and then it's the job of custodians to confirm and settle the trades. If RBI is telling custodians not to confirm the trades, it's the responsibility of the brokers to maybe take delivery of the orders which were put in and then dispose of as and when they want to. That is the crux of the matter. Let me get in Santosh Nair into the conversation here. Santosh, have I summarized it correctly, and come in with more inputs?
Yes, absolutely. Now, what our sources say is that SEBI is trying to persuade RBI because what we understand is that the 74% limit had been breached well before even the notification had been put. So it means that in addition to the trades which were put after 139, there are still a lot of trades which were done even before that, and they've exceeded the 74% cap. So what SEBI is trying to tell RBI is that give the foreign investors some time, a certain duration in which they can unwind those trades. But as far as the trades done after 139 is concerned, it will be mostly the broker's responsibility. And in some case, it could be an error because there would have been outstanding orders in the system when the notification came, and those orders might have got executed. So it's unfortunate for those brokers, but there's no idea of what the quantum exactly is like.
Okay, I think we have Deepan Mehta, member of both the BSE and NSE, joining in. And we also have, of course, market veteran Deena Mehta, who's with us on the phone line as well. Thanks very much, both of you. Mr. Mehta, ma'am, appreciate you joining in on CNBC. First, if I can come to you, Dina, how would you react to the resolution in a way which has been found, which is that it is not the custodian's responsibility, it is basically up to the brokers to settle the issue now? Go on, ma'am.
I think it is a very, very wrong decision which has been taken by RBI. In fact, RBI should not interfere with the settlement process of the exchanges. It should be left to the exchange. The solution to this entire mess is very simple, and that is that if the limits have been breached, then all that needs to be done is the excess shares which have been purchased, they can be put into an escrow. And those FIIs who have bought these shares, they should be, or through their custodians, they should be asked to unwind it at the earliest possible time, which may be tomorrow morning or maybe in the latter half of the day. But asking the custodians not to honor the trade, I think we are playing with the settlement system. In fact, India takes great pride that we have not had a single settlement failure. Fortunately, most of the brokers are FIIs, and they would have the wherewithal to, take delivery of these shares. So I do not see a major crisis happening, but it is a completely avoidable problem. And solutions like this, they have happened in the past when we did not have full custodian settlements used to happen earlier, and all that was done was the shares were put into in an escrow and give them 24 hours, 48 hours to unwind the positions. I think that is the way out of this. I do not think that RBI should really interfere in the settlement system of exchanges. It is very dangerous, and it can lead to a very big crisis, if it is not handled properly.
Mrs. Mehta, this is Santosh here. Do you think there needs to be some overhauling of the system at RBI's end also to ensure that these kind of incidents don't happen? Because probably this is the first time that the RBI had to put out a notification midway through the trade halting purchases. There's been a lot of confusion around that. So what do you think possibly can the RBI do to avoid such the recurrence of such events going forward?
No, I think the thing is very simple, and that is that RBI should, announce at the close of the business day as to what is going to be the next day's opening restrictions which will be there. And in course of the day, if there are any breaches of 74%, then those parties should be informed that with the opening of the market or within the next trading day, they should square up the position. I think there should be a well laid down procedure only for such breaches which happen, because see, the transactions happen throughout the day, and in the middle of the day also, if there is a breach, it is not possible to stop the trading or to stop the settlement. I think a logical process should be outlined.
Let me get in, Mr. Mehta. Let me get in deeper into the conversation as well. I'm just coming back to you. Deepan, you heard Dina Mehta there. The counter argument to this is, the point is, if the broker, for example, puts in a wrong trade, punches in a wrong trade, it's the responsibility of the broker. We saw what happened with in the case of MK, right? The argument which is being made is that exchanges put out a notification on their terminals. Brokers are supposed to see it and sort of respond appropriately, which may not have happened in this case. Hence, the issue devolves on the broker. Your thoughts, Deepan?
I think, the way online trading takes place and, with the presence of the terminals at the FII's offices themselves, through direct market access, just to watch something like this notification flash, and by the time the orders are already taking place, some of the orders are driven by smart order routing systems. So it's not, okay, it's fair to say the broker should have seen the notification and should have curtailed the entire trading, but in practically it's not doesn't function that way. And I tend to agree with Mrs. Mehta, Dina Mehta, that it's not the broker's responsibility, and I think RBI and SEBI need to find a way out of this mess which has got created. And I would be of the view that even if they are to be put in a kind of an escrow account, just giving 24, 48 hours is just not sufficient, because then the broker or the FI may be having to take a hit because if they have bought at a higher price and now they have to liquidate at a lower price, then the difference gets created, and that again confusion and misunderstanding happens as to who is to bear the loss. So maybe if they are to be put in an escrow account, then a longer time frame should be given to the FII or to the broker, whoever the party eventually is responsible for it, to unwind the trade.
Right.
Alternatively, I think SEBI, RBI could consider letting the FII limit, the 74%, be breached for a few weeks or a few months, because sooner or later, I think these things tend to kind of adjust themselves, and if FI were to sell at higher price or if the equity capital were to increase, then this would get adjusted. So
Sure.
that would also one of the options which could be considered.
Fair enough. Santosh, just to get your inputs, what we are saying is it's not custodians who are going to handle this matter, right?
Right.
So brokers are going to handle it.
Exactly.
But what both Mr. Mehta and Dina told us is that the solution from a broker angle could be the escrow account solution. We don't know that. It well may be, right? It's possible.
Yeah, but then the duration also matter and how the stock price performs during that. So if they are given a 48-hour window and the stock price, let's say at the end of 48 hours is lower than what it is, so the broker will have to take a loss. And now in this case, it's something which is no real fault of his.
Right.
So in that being the case, probably that, allowing a higher FI limit for a while, till there are systems in place that can prevent such
Right.
incidents
Right.
happening.
No, so to resolve this particular issue, it is yet possible that brokers may not have to take delivery, etc. It's the escrow solution is possible. I mean, in a situation now that it is.
But there is a payout happening, right?
Yeah.
They'll have to pay. They'll have to pay for those shares. There's a settlement happening.
Right.
So clearly, and if the price then falls at the end of whatever the period is stipulated, it's still the broker who will be taking the loss.
Right. I want to just get a quick sort of closing comment both from Dina Mehta and Deepan Mehta. Dina, if you can tell us, do you know of brokers who have been affected because of this issue? And could you share any numbers with us, rough numbers, which you may have heard?
My market feedback is that almost 90 to 95% of the brokers involved are essentially FII brokers who are well capitalized and who should not put the market to any risk. This is the feedback that I have got from various brokers that I spoke to. So it is not really going to be any crisis situation.
Absolutely. What about the size of the transactions are also pretty small, right? I mean, in question,
yeah,
which will have to be resolved.
It is not something which will lead to a crisis. That is the feedback that I have got.
Deepan, you would agree with that?
Yeah, I think so. And the quicker the matter is resolved and roadmap is put in place, the better it is for the entire market and all the intermediaries.
Thank you very much. Deepan, thank you very much. Ma'am, appreciate both of you joining in this evening and throwing some sort of light on the matter. Santosh, thanks very much for coming in.
Thanks, Prashant.
Thanks, Kritika, back to you.
All right, Prashant. Santosh, thanks for taking us through the discussion.